Do you know there was so much money being printed during COVID-19, and that's what we're going to discuss. And if you understand how much money was printed during COVID-19, then you may have much better idea how severe inflation will be in the future. Then you can prepare for that, because that's very, very important factors. If you don't prepare for that, your wealth will actually be kind of erased quite a bit. Inflation is like a silent killer. They kind of eating your money while you are not aware of. So I would say this video is very important if you want to keep your money or even make some more money. So this is not financial advice. Please do your own due diligence before investing. So let's just dive in. So there are some perspectives. The perspective is how much money being printed. These numbers are all in trillion. So if you just look at how much money the U.S. government printed for COVID, most of the money was printed. It's around 5.2 trillion, which is extremely high. Just for COVID-19 alone, it's already more than World War II in today's dollars. So it's, the U.S. spent so much money in World War II, and COVID-19 in these 2 years already surpassed World War II, which is a 4-year war. And that's not just the COVID release fund. There are quantitative easing and the infrastructure. So all in all, it's 13 trillion, and 13 trillion is more than 13 biggest wars in the U.S. history. So that's insane. Or you can just compare World War II plus the wars since 2001, which is a lot. But the spending in these 2 years already surpassed that. And in such a short amount of time, printing so much money, that will only cause one thing, which is inflation. We already start seeing a little bit in the pre-COVID times. The deficit is around 1 trillion, and post-COVID, which is these 2 years, the deficit each year is around $8.5 trillion, which is a lot of money. So you can have a sense how much money is actually being printed. And the U.S. actually have quantitative easing for a long history, and on average increased 14% money in circulation, 14% money supply. But in 2020 alone, just the fund for COVID is already 27%. And not just that, there are still quantitative easing and infrastructure fund. So if you add all of them, the money supply is actually increased 35%, which means the money in circulation increased 35. In theory, you will increase the inflation by 35%, but you haven't experienced that much yet. Is because of most of those the money printed, it's like injected to the stock market, venture capital, bond market first, and then after people selling their stock, they will use the money to spend in their daily spending. Then that's the time that you will experience inflation in your daily life. So there's certain time lag between the actual daily life inflation, and the stock market inflation. So stock market, if you haven't been paying attention to stock market, you definitely realize after COVID-19 big drop, the stock market already recovered very quickly and set the all-time record high. So let's just look at the inflation. Inflation is actually gradually coming. It's slow, but it's coming. The inflation definitely, before COVID, the inflation is like 1.5, 1.2% ish. But now, this year, especially later this year, 2021, the inflation jumped to 5%. and last month, just recently, it already reached 6.8%, which is the highest in almost 40 years. 6.8%, and you can see the rate of increasing is still pretty high. It may hit 10%, even 15%. We don't know, but still, I don't think the hyperinflation will come. The foundation of the U.S. economy is still very good, and the U.S. dollar is not like they kind of regional dollars. They only circulate in one country. It's global currency, so it's very, very unlikely we will see hyperinflation, but we definitely will see severe inflation. All right, so how do you protect yourself? The best way to protect yourself is to buy some assets that will increase value with inflation. One is stocks. If you buy stocks, because buying stock is actually buying company, right? If inflation really happen, company can adjust the prices, then the consumer will still need to pay. For example, if you buy a company that's making consumer products, for example, it may be making body lotion, because people need to buy body lotions no matter what. I mean, in the normal situations, they will still buy body lotions. So even the body lotion price increased like fivefold because of inflation, they will still buy it because their money supply also increased fivefold. So that's not a problem. What's actually scary is if you don't buy stock, you just hold the cash. Then your cash will immediately become fivefold less worth, right? So another thing you can do is to buy some rare metal, something like gold, or you can buy real estate, which is you buy land. Land is like there's limited supply of land, so they still can keep your money in certain value. They won't be eroded by inflation. So there are certain things that you can do. Just don't put the money in your bank. Okay. That's actually the worst things that you can do. So that's all for today's video. If you would like to receive more videos like today's video about financial research like this, don't forget to subscribe. Other than that, I'll see you next time.